talk about what's going on in the marketplace right now. And we're going to look at the major metropolitan areas across the state of Texas. We have people online all across the state of Texas, and then we have a local audience here as well. And I'm going to start with the statewide numbers. So real estate's good. We're in the hottest real estate market that's ever existed in the great state of Texas. Sales prices right now, average sales price up 14%, median sales price up 19%, 2021 compared to a year ago. The number of units sold, houses sold, is up a little bit, 6%. The reason it's not up any more than that is there's nothing left to buy. Literally, right now, if you go into the supermarket, the shelves are completely empty, right? You put some on the shelf, it doesn't last long. So we're selling basically everything that gets put on the market, and then the number of sales is not going up that much because there's just literally nothing left to buy. Average sales price year to date compared to a year ago, up 18%. That's statewide. Now each city varies a little bit. Closed sales from month to month, up 1%, not much difference. But this is the number that I always look at, months of inventory. What is months of inventory? People always say, well, what's days on market? Days on market doesn't matter. Months of inventory is what matters. Months of inventory means if you stop putting any more houses on the market and all you had left to sell was what's on the market now, how much before you'd have nothing left? And the answer is 1.1 months. That's what, 5 weeks, just under 5 weeks of inventory. So if people didn't put any more houses on the market in just 5 weeks, there'd be not a single house you could buy in the great state of Texas. It's pretty amazing. Now, buyer's market, seller's market, let's define those. They say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If it's right around 6 months of inventory, you have a neutral market. Historically, you have 5.5, 6 months of inventory. That would be considered a neutral market, not a buyer's market, not a seller's market, just a neutral market. We are in an incredibly strong seller's market. 1 month of inventory, just over 1 month of inventory. We've never seen something, and it's been like that for quite a while, right? The pandemic created a housing shortage. Dodd-Frank turned off the money. We're not building enough houses. Everybody keeps having babies and moving from California to Texas, right? And they need a place to live, and we're literally not even building enough houses to house all the people coming in because there's not enough capital available and materials available and supply chain. And all of this has manifested itself into a great, big, huge housing shortage. And there's really no end in sight. And I don't really care. I'm not here to tell you like I have some crystal ball. These are all data that is right out of the Texas A&M Real Estate Center. And I'm not here to tell you I have some magical crystal ball. I don't actually have a vested interest in trying to convince you the market's going up or down or sideways. I can make money in any market. Sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell. We can make money in up markets and down markets and sideways markets. And I've been doing this for 18 years and been doing exactly that. But right now we're in an incredibly strong up market. And there's nothing on the horizon that we can see that will change that. Because real estate, what's interesting about it, it really doesn't care about the economy. It really doesn't care much about interest rates. You would think it does, right? I'll tell you what, during the Great Depression, the big one, right? What happened to real estate? You know what happened? It went down a whopping 6%. Almost nothing. During the Great Pandemic, what happened to real estate? Went up 20%, right? It's not the economy that drives real estate. It's supply and demand that supplies real estate, that drives real estate prices. When you have more demand and less supply, okay, then prices go up. When you have more supply and less demand, prices go down. In 2008, money was free. If you wanted to get a loan in 2007, you walked into a bank, you said, I want a loan. A banker would hold a mirror under your nose. If they saw fog, you got a loan. Yeah, that's what they used for the loan application back in 2007. Stated income loans. Anybody heard of the stated income loan? Yeah, you know what a stated income loan is? Hey, Bob, you got enough money to pay us back? Yeah, I do. Okay, loan approved. That's what they literally did. It was absolutely insane. Money just flowed like unbelievable. Builders were building like crazy, and we built an incredible number of properties. In fact, far more properties than people needed. And we had too much supply. And then eventually everybody that could fog a mirror bought a house, and so the demand went down, and when supply exceeds demand, crash. The market crashes. That's what happens. Now, after the market crash, our government in its infinite wisdom came in and passed a bunch of laws to make sure that problem that didn't exist anymore was fixed, even though it was. But at any rate, yeah, that's what the government does, doesn't it? So anyway, they passed Dodd-Frank, which made it more difficult to get a loan. Okay, a lot more difficult to get a loan. So now, as a result, we don't have the capital, and we have supply chain problems on top of that to build enough houses for all the people that are having babies and move into Texas. So we don't have enough supply, and yet we still have growing demand because people keep having babies and moving to Texas. And there's nothing on the horizon that's going to show us when that's going to change. I don't know when it's going to change, to be honest. Real estate is easier to predict than the stock market. I have no idea what's going to happen in the stock market. The stock market could crash tomorrow. Who knows? Probably will, right? The economy is pretty unpredictable as well. Real estate is not as unpredictable. There's a number of things that you can look at when it comes to real estate, leading indicators. One of them is months of inventory, or inventory, right? It gives you some idea of what's on the horizon, right? It has some idea. Condominiums. We always call condominiums the canary in the coal mine. When you can sell a condo, you can sell anything. And then when the market starts to soften, the first thing to go is the condos. First thing, right? Rural condos, right? And interestingly enough, for a lot of different reasons, Dallas has always been the bellwether for Texas. So you want to see what's going to happen 6 months from now, look at inventory of condos in Dallas, right? That's it. That's your future. And right now, you put a condo in Dallas on the market, it sells in like a month. So yeah, I don't know where the future is going, but we're in a housing shortage, and I don't foresee that changing anytime soon. Jumping into some of the different cities, Houston, sales price up 11%, median up 15%. Year to date, up 16% compared to a year ago. Forecast is that prices are going to increase between 15 and 20% in Houston over the next 12 months. Months of inventory, 1.3. Again, nothing to buy. Austin, this is not a typo. The average price of a house in Austin is $645,000. Average. Holy tamale. We were doing some research on this, and it turns out that Austin is Latin for San Francisco. Yeah. Holy cow. Tesla moved into town. All the high-tech companies are moving from California to Austin. 645, average. That's absolutely unbelievable. Months of inventory, no, this is not a typo, 0.5. That's 2 weeks. 2 weeks of inventory. I've never seen anything like it. It's pretty freaking unbelievable. I was reading an article in the Austin American-Statesman. There's a shortage of $10 million houses in Austin. A shortage of $10 million houses. How often does that happen? You put a $10 million house, boom, sells right off of the charts. Prices up 29% over the last year. We're forecasting, because of the shortage, that prices will go up another 25 to 30%. And by the way, these price forecasts, what we're expecting to see over the next year, every year my wife gets all the data and does a forecast. She's been doing this for decades, almost 2 decades, not quite 2 decades. But I don't think her forecast has ever been off by more than a couple percent. It's like always been spot on. So again, I own a lot of rental properties. I'm excited about these numbers. But that being said, I make money in down markets. I make money in up markets and sideways markets. So I'm not here to try to get you guys excited about prices going up. Prices going up creates problems for real estate investors. It's hard to find good deals. We're going to talk about that. You can make money in up markets, down markets, and sideways markets, but this is kind of where we see things going. Now, that being said, you got a bunch of cash sitting around. Here's a piece of advice. Buy anything. Yeah. I mean, I can't guarantee with great confidence that the stock market's going to go up 25% this year. I would bet a lot of money that the real estate market will in Austin. San Antonio, the most affordable city, is not so affordable anymore. $374,000 average price. Prices year to date up 16% compared to a year ago. We do forecast price will go up another 15 to 18% over the next year. 1.3 months of inventory. Again, there's not much available to buy. And Dallas, Dallas 475. Dallas has always been the bellwether for Texas. Year to date, sales prices up 20% compared to a year ago. 0.8 months of inventory. Again, everything is right around 1 month or less or more. Forecast that prices in Dallas will go up anywhere from 18 to 20% over the next year. So it's a great time to be a real estate investor. We are in the hottest real estate market, and you are there. You know, you can always make money investing in real estate. 2008 was a great year for me. When the real estate market crashed, there were fantastic opportunities that year. This is another great year for me. I own pushing $20 million in rental properties. That's pretty freaking awesome, especially when you have this kind of appreciation. You know, everybody's complaining about inflation right now, except the real estate investors. We just have another name for it. We call it appreciation, right? Yeah. And when all your wealth is tied up in real estate, yeah, you want inflation. It's really a pretty cool thing. So there we are. So